Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch this stock market update and industry sector review for the week ending Friday, April 6th, 2018. Before I jump into the charts of the Dow, S&P, NASDAQ, and Industries, I would like to begin with the quote of the week. This week's quote is from Mark Twain. Mark Twain, also known as Samuel Langhorne Clemens, his birth name, was born 1835, died 1910. He was an American writer, humorist, entrepreneur, publisher, and lecturer, and the author of The Adventures of Tom Sawyer and its sequel, The Adventures of Huckleberry Finn. Mark Twain once said, "You can't depend on your judgment when your imagination is out of focus." Those are some wise words from Mark Twain. Well, we had another week of pretty significant volatility, several days to the downside on the indexes and a couple days to the upside so far. We sit on the eve of the Bureau of Labor Statistics jobs numbers, which come out Friday, April 6th at 6:30 a.m. Mountain Time. That will definitely affect the markets, but this video is being recorded on Thursday the 5th after the close. So I will share some information on social media once the jobs numbers are out. But let's go ahead and look at how things are after the close on Thursday, starting with the Dow Jones Industrial Average. Before I begin, I would like to say that all of the charts you're about to see are 6-month charts from October 5th, 2017 to April 5th, 2018. Beginning with the Dow Jones Industrial Average, we currently have the price of the Dow Jones above the 5-day moving average and the 20-day moving average. To elaborate on that, we have the 5-day moving average in red is currently below the blue 20-day moving average, indicating short-term weakness, and the blue 20-day moving average is below the purple 50-day moving average, indicating intermediate-term weakness as well. Currently, here's some of the support and resistance lines that the Dow is trying to get through. As far as resistance, we draw a line from the high of January 26th and touch all of the prior tops, and that includes February 26th and March 9th, and you can see the Dow came up to on the high of the day April 5th and actually touched that line and then backed off a little bit. The black line is where it closed for the day. So we are currently sitting right underneath the resistance line going back to January 26th. As far as support, that goes back to the November 4th week of the election, 2016. And if I zoom out, you can see that if we connect the low or the close of November 4th, 2016, and draw that up to here, you can see that we touched it for the second time back in September of 2017. After coming off from the high January 26th, we touched the line on February 8th, 2018. We broke that line on March 21st, which is very bearish. And as of the 5th of April, we have rallied up to the bottom of that line. So right now, it looks to me like Friday, April 6th will be a very interesting day for the Dow Jones Industrial Average. I won't be able to put that in this video until next week, but you're welcome to check social media for some commentary after that news comes out at 6:30 Friday morning. Here's the chart of the S&P 500 stock index, and if you look at this, the 5-day moving average is below the blue 20-day moving average, indicating short-term weakness, and the blue 20-day moving average is below the purple 50-day moving average, indicating intermediate-term weakness as well. So definitely caution is needed for the S&P 500. If I draw in the resistance line for the S&P 500 from the top here to the second top on February 26th and down, you will see that on April 5th, when we recorded this video, we have come up and touched that line one more time. And this breakout here, where the black line or the price of the index broke out, is a false breakout. it rallied up and then went right back under. The true resistance line is that January 26th high, February 26th high, and then March 20th and 21st and April 5th. So we'll see on Friday, April 6th, if we can break above that line, which would be a sign of strength. So we'll just have to wait and see. If we look at the long-term support line, though, that goes all the way back to February of 2016, farther back than just the election. If you draw a line from the bottoms here, you'll see that we touched that line once, twice, 3 times, 4 times, 5 times, 6 times, and as of April 5th, we are touching it a 7th time. Except the problem with this line right now, the bearish situation, is that that line was broken pretty significantly on March 22nd and 23rd, and we have been down there ever since. And as of April 5th, we are still below it and testing that support line from underneath. That support line is now resistance because it has been broken and we have been under it for so long. So we are currently converging on 2 significant resistance lines. The one off the top here, which we're touching, and the one that goes back to February of 2016, which is very powerful, and we're sitting right under that too. So looks to me like April 6th will be a very interesting day for the S&P 500. So stay tuned for more information, but remain cautious, and we'll see if this thing goes up or down on the 6th of April. Here's the chart of the NASDAQ 100 stock index. Currently, the 5-day moving average in red is below the blue 20-day moving average, which indicates short-term weakness. And as of April 5th, the 20-day moving average has officially crossed below the 50-day moving average, which indicates intermediate-term weakness and is extremely bearish. So use much caution with the technology stocks in the NASDAQ 100. If we look at the support line for the NASDAQ 100, it goes back to the Brexit vote of June of 2016. If I draw a line from June 24th, 2016, and draw it up to the current price on April 5th, 2018, you can see that the support line, which is now resistance, was touched originally here once, twice, 3 times, 4, 5, 6, 7, 8, 9, and we broke it in March 2018, and for the last couple weeks we've been below it, and we are currently testing that line from underneath. Now that line, once it's been broken, especially for this long, is now resistance. So again, not only do we have short-term and intermediate-term weakness for the NASDAQ 100 confirmed, but we are currently below a almost 2-year trend line. So that is very bearish for the NASDAQ 100, which is full of the technology stocks. So just use a lot of caution here going into the second week of April with all of the Dow, S&P, and NASDAQ stock indexes. Here is the S&P 500 Information Technology Stock Index. Currently, the 5-day moving average in red is below the blue 20-day moving average, indicating short-term weakness, and the blue 20-day moving average is still above the purple 50-day moving average, indicating intermediate-term strength. However, those lines are approaching a crossover, which may signal a weakness confirmation in just a few days. So use caution on the technology stock index because very much like the NASDAQ in behavior, this thing is looking to be following the same path as the NASDAQ. So we might get a weakness crossover the second week of April. So stay tuned, but use caution here. As far as the support for this technology stock index, it goes all the way back to June of 2016, which was the Brexit vote in Europe. And if you draw that line up here, you can see that the NASDAQ began its current trajectory June 24th, 2016, touched the line once, twice, basically 3 times, 4, 5, and 6. So as long as that red line is holding, the technology stocks have are still hanging in there, even though a lot of their short and intermediate term signals are very weak. But if this red line gets broken in the month of April, that is going to signal some significant trouble for the technology stocks. So use caution here and stay tuned for additional information in the weeks ahead. Here is the S&P 500 Consumer Staples Stock Index. The 5-day moving average in red is still below the 20-day moving average in blue, indicating short-term weakness. However, those lines are trying to cross, but it may take another week or so if they do at all. So stay tuned on that one. The blue 20-day moving average is still significantly below the purple 50-day moving average, indicating significant weakness in the intermediate term. So continue to use caution on these consumer staple stocks, especially considering the resistance line from here to the other highs here. If that red line gets broken, it stands a chance. But that begins on February 16th. It's touched again on March 9th, March 13th, and touched it again on April 5th, and then closed below the line. So the jury is still out on consumer staples. It is taken quite a beating ever since the high on January 26th, and still looks significantly weak in the days to come. So I'll notify you if that changes, but right now just use caution. Here is the S&P 500 Industrial Stock Index, and currently the 5-day moving average in red is below the blue 20-day moving average, indicating short-term weakness, and the blue 20-day moving average is below the purple 50-day moving average, indicating intermediate term weakness as well. It is stuck under a pretty significant amount of resistance. If you look at the line from the low of November 15th, 2017 to the lows of February 2018 here, we broke through that March 22nd, 2018, tested it and failed on March 26th, tested it again March 29th, failed, and as of the recording of this video on April 5th, we're testing it one more time. We've been stuck underneath that line for so long that it is definitely a bearish indication, and that line actually goes all the way back to the election night of Donald Trump. And if you extend that line all the way back and then convert this line into a candlestick chart, you can see that we started off November and we have come up here, and essentially it acted as support here. It touched it November 15th, 2017, touched it again here, touched it again, touched it again, touched it again, and has touched it several times in March. And as of April 5th, we're touching it one more time from underneath, and it just cannot get broken. And all of the other technical indicators are showing weakness. So be very careful with the industrial stocks of the S&P 500. Here's the S&P 500 Utilities Stock Index, and currently we have the 5-day moving average in red above the blue 20-day moving average, indicating short-term strength. And recently the blue 20-day moving average crossed above the purple 50-day moving average, indicating intermediate term strength as well. So there's a lot of positive things going for the utilities sector right now. And as of April 5th, we broke above the 3 prior highs. And if I draw a line on here, you can see what those highs were. We had the high of February 23rd, the high of March 16th, and the high of March 29th. So we broke above that on April 5th, and we're making some good progress to the upside. So things are looking really good for utilities. Here's the S&P 500 Consumer Discretionary Stock Index. Currently, the 5-day moving average in red is below, quite a ways below, the blue 20-day moving average, indicating significant short-term weakness. And the 20-day moving average in blue is below the 50-day moving average in purple, indicating intermediate-term weakness as well. So continue to use caution on the discretionary stocks because of those two weakness indicators. And it will just have to resolve itself at some point here, but right now it is just going sideways and it really hasn't made any progress since we came down on February 5th. So it's been a couple months of sideways volatile action, and we need to see this sector break up or break down one way or the other, and we'll just have to see where the second week of April it chooses to go. Here's the chart of the Dow Jones Financial Stock Index, and currently the 5-day moving average in red is below the 20-day moving average in blue, indicating short-term weakness, and the blue 20-day moving average is below the purple 50-day moving average, indicating intermediate-term weakness as well. So caution is recommended on the financial stocks still. Here's the Dow Jones Oil Gas Stock Index, and it's still stuck in its sideways consolidation going back to February 7th. It has not broken above any of its resistance yet. The 5-day moving average is essentially intertwined with the 20-day moving average, indicating significant short-term indecision, and the 20-day is below the purple 50-day moving average, indicating intermediate term weakness as well. What we're dealing with here on the energy stocks and the oil and gas index is if you connect the tops of the prior highs of February 26th and March 21st, we're currently sitting under it right now on April 5th. Unless this index can get above that red line, then it's going to be in big trouble. That is acting as a significant amount of resistance. So we need to get confirmation of a breakout there and some higher prices before seriously even looking at the oil and gas stock index at this time. Here's the Dow Jones Healthcare stock index, and currently the 5-day moving average in red is far below the blue 20-day moving average, indicating significant short-term weakness, and the blue 20-day moving average is below the 50-day moving average, indicating intermediate-term weakness as well. So there's nothing attractive about the healthcare stock index at this time. In fact, the price on April 5th is the same as it was all the way back here on September 8th, 2017. So until it can show some signs of life, just stay away and remain cautious on the healthcare industry. Here's the chart of the Dow Jones Real Estate Stock Index, and it's the final chart of the day. The 5-day moving average just peaked above the 20-day moving average a few days ago, so we have a short-term strength confirmation. And as of April 5th, the 20-day moving average in blue just popped above the 50-day moving average in purple, indicating intermediate term strength as well. They are almost all on top of each other right now, so there is a lot of indecision because of the fact that it hasn't made any progress in a couple months. But it is moving higher since March 23rd and bringing some strength confirmations with it. So we'll just have to keep an eye on the real estate index, and it really needs to get above this high from March 16th to begin showing some significant signs of strength. So we'll see where it goes on April 6th, but right now things are picking up and looking better for the real estate industry. Thanks again for watching this stock market update. I hope you found the charts and information useful. There is no doubt that the volatility will continue in the days ahead, so just as I always say, remain vigilant, cautious, and aware, and pay attention to your investments, because getting back to even is not an investment strategy. Before you go, please click the subscribe button on this YouTube channel and then click the little bell next to that button that says notify me when additional videos are posted. And in the summary description of this YouTube video, you will find the links to the Christensen Wealth Management Facebook, LinkedIn, and Twitter pages. If you use those social media sites, please visit Christensen Wealth Management and like or follow the page while you're there. Well, I look forward to seeing you again in a week. Enjoy your weekend and have a great day. Talk to you soon. Bye-bye.